Hey there, it's David Cinelli here, Realtor with Royal LePage Signature. Well, the numbers are in for April 2021 when we look at the Toronto Real Estate Board. So we notice that average price is still very strong and still the amount of active buyers in the market are still strong as well. But why is that? The narrative that we have heard across all media sources is that we have a lack of inventory, and this lack of inventory is what is driving sales numbers and average sale prices up. But is this really true, or are there other factors at play? Well, let's run the numbers and let's dive into them a little more deeply to see what is actually happening. First off, let's look at the number of sales we had in April. Now, I usually compare this year's April compared to the previous April, but that's not really fair to do in this situation. As you know, last year we were in a lockdown and sales dropped dramatically. I think we had just under 3,000 sales. Fast forward to this year, we had 13,663 sales, which is a very, very strong number. It is a little less than we had when you compare it to March, which March was the most sales we've ever had on the Toronto Real Estate Board, believe it or not, with just over 15,000. But it is still a strong number. And we did have more sales in April than we did in January, February, which were also seen as very strong months. Overall, our market for the number of sales is still strong, but it may be leveling off, but it's really still too early to tell what's going to happen for this month and this spring market. Of those almost 14,000 sales, the majority of the sales occurred in the detached segment, followed by the condo segment, which is really good to see the condo segment bouncing back, and hopefully we'll get back to a normal level in the next few months. An average sale price, well, this April was the third consecutive month, well, actually the third month ever, in which we saw average sale price over $1 million. Compare April to March, there was a little bit of a drop in average sale price around $10,000. But again, that's not a significant drop. If we were talking hundreds of thousands of dollars, maybe then we could say, hey, now's the time to jump into the market because average price has dropped dramatically. But this is not the case. The overall average sale price came in just under 1.1 million. Now let's compare all major home types and break down how their segments did this past month. Again, I am not going to compare this April compared to last year. It just doesn't make sense, again, because of the lockdown and the lack of sales we had. The sample size is just too small to compare. The detached segment had an average sale price of $1,387,629. And the average sale price of a semi-detached was $1,068,923. Townhomes came in at just under $860,000, where the condo segment was hovering just under $700,000. At the beginning of every month, there are always analysts trying to figure out what is happening in the Toronto real estate market. And especially now that the market is so hot, you'll get tons of analysts all over the TV and all over the media trying to explain what is happening. And the narrative which I described earlier is what we mostly hear is that it's lack of inventory which is causing prices to increase because of simple economics. Because we do have a strong demand, less supply will mean that average sale prices would increase. In order for this narrative to work, we would have to assume that we have a really strong demand and a real lack of inventory, which is causing prices to increase. So do we have those two factors? Well, first, let's look at demand. We kind of know that there is a strong demand by we see by the number of sales, but what are the factors that are underlying this demand? The first factor is we are currently seeing ultra low borrowing rates in which people want to take advantage of. The government of Canada is artificially keeping the overnight rate low in order to stimulate the economy. And it is working in the Toronto Real Estate Board. As you see, many people want to take advantage of these low borrowing costs and purchase a home. The second factor is more disposable income. We have lower interest rates, so we do have more disposable income because we're not spending as much on a mortgage. Plus, with the lockdowns, we aren't spending as much money traveling or going shopping as often. Yeah, we are buying things on Amazon, but I would argue that we are spending less money now than we would if we were not in a lockdown situation. Therefore, many people, and some of the people who are students which are living back home with their parents, have more disposable income. And that disposable income is now used as a down payment to purchase a home. And a lot of these people, if we didn't have a lockdown, would not have been able to afford this down payment. So this injects a lot of new buyers into the market, and even the higher end buyers are able to afford more. Therefore, it's pushing the prices up. And the third factor, which I think is the biggest culprit, is FOM, fear of missing out. All of these would-be buyers that are sitting on the sidelines trying to figure out when to purchase are now seeing house prices increase, and they fear if they don't act now, they may miss the boat and not be able to afford the home which they want to get into. Therefore, they're jumping in a little bit earlier and then also forcing the prices up. As you can see, from those factors just mentioned, we do have a lot of demand here in the Toronto Real Estate Board. But in order for prices to increase, we do need to have a supply decrease as well as an increase in demand. So we know we have an increase in demand, but do we really have a lack of inventory? The number which most analysts or realtors use is what we call as active listings. What active listings is the amount of listings currently on the market at the end of a month. And they will refer to this listing and explain whether we have a lot of inventory or a lack of inventory. But again, it doesn't show exactly what's happened throughout the whole month. It only shows a point in time at the end of the month. If you take April's active listing, for example, the number we had at the end of the month was 11,668 active listings. And if you compare this April to the past Aprils dating back to the last decade, all the way back to 2011, and averaging them, well, the average number we had was over 16,000 active listings at the end of April. So comparing this number, the 11,668 compared to the 16,000, and it looks like we have a lack of inventory, around 27.5% to be exact. So if I was an analyst, I would say there is definitely a lack of inventory and a higher demand, as you see by this 27% decrease compared to all previous Aprils dating back to 2011. But what about the rest of the month? How does that compare? Instead of looking at active listings, the number we really should be concentrating on is the number of listings throughout the month. This past April, we had around 21,000 listings. Well, if we compare that to the past decade and just isolating April's, well, the April average amount of listings we had throughout the month was around 16,600. Now, taking that number, we realized we actually had 25.5% increase in the number of listings this April when you compare to all the other Aprils for the past decade. So our inventory levels are actually up, not down. And why are our active listings lower this past April compared to all the other Aprils since 2011? Well, we had an increase in the number of sales. There was a 41.7% increase this April when you compare to all the Aprils for the past decade. That is insane. So of course it looks like we have a lack of inventory because we have more sales. So basically this tells me that no, we do not have an issue with inventory or a lack of supply. What we have is a fear of missing out. And unless things change drastically with either interest rates or the amount that people can borrow, prices will continue to increase due to increases demand, not a lack of inventory. Therefore, we are still in a seller's market, and a pretty strong seller's market, which tells me that yes, it is still a great time to sell. If you are thinking of selling and maybe want some help or want to know how I'm able to help you achieve your goals of selling your home for the most amount of money in the least amount of time, you can always call or text me at 416-876-9998 or email me at dcinelli@royallepage.ca. Bye for now.